Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil, and the first headlines. Nifty claims 11,000, Sensex the 36,000 mark as metals, energy and banking stocks lead the rally. And open interest in ONGC and Z Entertainment surges after traders take fresh positions in their respective futures. Asian Paints is one of the top losers on the Nifty after the paint maker fails to meet estimates, at least on the top line in the third quarter. And Prime Minister Narendra Modi is all set to address global CEOs at the World Economic Forum later today.
All right, let's take a look as to what's happening with the markets today. Well, Nifty's conquered 11,000 and Sensex has conquered 36,000. So once again, a new day, newer highs and new records once again for the markets. Did you expect it so early, Agam, to conquer 11,000?
Absolutely, absolutely.
You did?
Yes.
Really?
Yes, yeah. I
mean, know what, markets...
Look, Navneet, it was just 34 points yesterday, 34 points
No, I'm not
yesterday.
talking after yesterday's move. I was just thinking maybe it could be post the budget or something, because this was really fast. We touched 10,000 for the first time in July 27. Right. Market gave you another opportunity in the month of December as well. I think we slipped to levels of about 10,030 or 40 thereabouts. And what a move we've seen on the markets, defying all sort of fundamentals or technicals here, because traders, a lot of the analysts at least on the street were signifying that it is time to become cautious, but markets have been scaling newer highs. Nifty not only conquered 11,000, let me tell you, it has sustained the opening level, so that's a positive sign. 11,030 for Nifty. Let's just pull up the futures and also check. This is the expiry week. How are the rollovers stacking up? Because remember, until yesterday, the roll cost was low and the rollovers have been just about okay. The futures are trading at a discount, which they were yesterday as well, and we'll check the rollovers as well for you. Bank Nifty is definitely giving support to the index. So rollover just about 22%. No major build-up seen there as well right now. But for Bank Nifty, that too is trading with the discount 27,091. It is for the January futures. The call writers today, once again, after seeing these higher levels, are running for cover. So we've seen unwinding for strikes like 10,800, 10,900 in today's session, and fresh put writing continues. And now that's moved higher. It is at 11,000 put strike, followed by 11,100 put strike. But what's happening with this this kind of option scenario? We've seen the Nifty put call ratio going up. Yesterday it was 1.79, and I wouldn't be surprised if this trend continues throughout the session. We could be somewhere about 1.85 towards the end of the session. The two key concerns which everybody's been highlighting, at least the derivatives analyst, is the higher volatility index. The VIX has gone up today as well, and we've been telling you that VIX usually moves in the opposite direction, but that's not been the case in the past few sessions. VIX is today also trading with gains of 2.5%. Yesterday it was trading with gains of 10%. The setup for February series, if you look at the maximum OI concentration, it is at 10,800 call, but a major support is continuing around the 10,500 put, because that's where almost 35 to 36 lakh shares are outstanding right now. Institutions, the FIs, this time around, I don't think they've lost. Agam, they were buying in cash. They were taking some bullish bets on the option side, as we've been highlighting, and also they were taking bullish bets this time around on stock futures.
Absolutely, and even today's day of trade, Navneet, you know, the largest gains in terms of futures and options open interest today is one of the Nifty heavyweights, and the Sensex heavyweights for that matter. That's ONGC. That should come up for you on the screen, and the 14.5% increase in open interest, while the underlying moves up by as much as 1%, so fresh longs building in there. Z Entertainment, on the other hand, is showing weakness, so shorts as far as the entertainment goes, another 12% added in open interest. Biocon, Jubilant Foodworks, we're looking at longs along with anywhere between 7 to 9% increase in OI. United Spirits, we're expecting earnings later on in the day today, looking at a little bit of weakness before ahead of its earnings. But let's take a look at some counters which are looking at unwinding in today's day of trade. And again, as we move into expiry, these numbers will go larger. That is with respect to this open interest change. But Berger Paints, Repco Home Finance, KPIT and NIIT Tech, along with Ajanta Pharma, showing some amount of declines as far as open interest in the January futures go. But once again, all eyes will remain on the Nifty heavyweights and what they can do to drive Nifty to high levels or perhaps a little bit of profit booking.
That's right, Agam. And today, in fact, it is a broad-based rally like yesterday because we've seen the broader markets also moving higher. But it is the commodity-linked stocks which are doing well because the Nifty Metals Index is your top sectoral gainer. It's up as much as 3.5% so far in today's trade. There you go. That's the intraday chart, up almost 3.6% as we speak. Well, before we get our guest on the show, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on 022-4540-4141. You can also write to us, in fact, on our social media platforms, Twitter, Facebook, with #AskSpeakYou hashtag. Well, let's get our F&O experts for the day then. Nirav Chheda of Nirmal Bank Securities and Amit Shah of BOBCAPS joins us on the show now. Good morning to both of you, gentlemen, and appreciate you joining us today on Bloomberg Quinn. Amit, let me come to you first. Is it time to book trading profits at least?
Well, so the kind of speed what we have seen in the market.
No, you will trail stop losses then.
I'll trail my stop losses, and even if you see there are positive developments which have happened since the market has started to peak from 10,700 to 11,000. Mid caps have been correcting. If you see, mid cap index has been down from 5,700 odd levels and to almost 4-5% odd. And even if you see the contribution supported by the front lines and the banking, so that's quite significant. The premiums are not that much. This is the sign where it is showing that the cash level buying is quite tremendous. And if we have seen over the last 3 to 4 days that the delivery volumes have spurred in most of the frontline stocks. So this is a healthy sign. Any retracements towards 10,850 odd would be a buying opportunity for, and the more it sustains about 11,000 odd, the index can see some momentum towards 11,400 odd.
So where do you see the expiry?
I see it can hover around 11,100, 11,000 odd levels. It would force some call unwinding, call writers to unwind their positions.
Which is happening in the last
Which is happening, but still the maximum open interest is still intact at those levels.
All right, so well, we're watching out for something like an 11,100, 200. But Nirav, good morning to you as well. Well, Nifty at 11,000, no signs of bulls letting up. How are you reading the underlying variables?
Yeah, it is just one of those months, in fact, where you just close your eyes and go with the flow. Again, you know, looking at the data, there are a lot of positive signs. 11,000 has been taken out, which is a very big positive. I was not expecting 11,000 to be taken out this month. It has been taken out now. It remains to be seen where it will end, because a lot of call writers at 11,000 will now start writing 11,200, 300 calls. So we actually get space for another 200, 300 points from here. Now coming back to VIX, VIX has been increasing because of the event, the budget event, and it will now again subside once the budget goes. So do not look much into the VIX. Just looking at the data, I would suggest one should be going long at current levels also, but hedging their positions, buying at the money put options.
Well, Nirav, I definitely belong to your camp. I never thought we would touch 11,000 so fast on Nifty. But nevertheless, markets are at record high levels. What sort of option strategies that you can deploy? We'll ask our experts. And Nirav Chheda today has a long straddle on Nifty. But before we take a look at his strategy, let's see what that exactly means. A long straddle is when one buys and at-the-money calls and puts in anticipation of increase in volatility, which so far has been the scenario. And when the volatility increases, followed by expansion in option premiums, the strategy becomes profitable. Nirav, over to you. Take us through your option strategy.
Yeah. See, from the start of the week, I've been actually, giving the long straddle, and it has been making a good amount of profit. We started at 10,500 and now at 11,000 also, buying the 11,000 call and put makes good sense to me. See, the VIX has increased, so overnight things can change pretty fast in such a scenario. And that is why I just want to hedge my positions, and that is why one should be buying 11,000 call and put combined premium comes to around 90 rupees. The stop loss for that will be 40. So once the premium, total premium comes down to about 50 rupees, that should be your stop loss. And the target should be about 80 points upwards, which means about 160 points total premium is what you target.
Okay, so a long straddle for Nirav. Amit, Nirav made an interesting point here. As we move into an event, we're expecting the VIX to rise substantially. I know you don't have a strategy on the index right now, but say if someone were to put, for compulsive traders, how do you think you could employ anything on the benchmarks then?
Okay, so for compulsion traders, I would go with Bank Nifty, buying a Bank Nifty call option. Say 27,200 would be a good strike price, where you can get a good amount of momentum. The reason is the frontline private banks have moved quite substantially, and if you see since morning, PSU banks are showing some triggers.
Right.
Like I believe SBI, Canara Bank, Bank of Baroda can be the top picks in the PSU space. So I feel Bank Nifty can see still momentum here. The rollovers have been very much strong compared to Nifty over Bank Nifty. The open interest has increased substantially over 136% odd. So Bank Nifty can see long rollovers in the Feb series as well, and that will add to the momentum. So someone who is a definite trader can go for 27,200 call option.
All right. So, well, in continuation of that trend, Amit also has a strategy on SBI. So if you could take us to that one as well.
So as I mentioned that I believe that there can be some action ahead of the expiry in the PSU space. So SBI among the entire space looks the best at these levels. The stock has spent a good amount of time around 300, 305 zone and has consolidated around those levels. And if you see since morning, the stock is showing some good activity around 310 levels. Okay. I believe the more it holds above 305, that can be a stop loss for traders. The stock can head towards 318, 19 ahead of the expiry.
All right.
Okay, well, the Nifty PSU banking index is also doing pretty well in today's trade. If you could just pull up that, as there has been some support which has come from the banking counters in today's session. As you can see, it's just come off a little bit days high, but still it's doing well. But what is doing well, we highlighted for you, that's the commodity space. And in terms of stock futures, I want to pull up Jindal Steel and Power. What a move that counter has had. Not only today definitely the move is good, but the stock in the last 3 to 4 months have given you stupendous returns. Jindal Steel and Power trades with gains of almost 9% currently at 287. Nirav, would you take a fresh bet on JSPL at current levels, or it's time to book profits?
I would still bet on the stock. See, I've been actually recommending this stock from 150 odd levels on your show itself. I still believe it can go up towards 340, 350 odd levels. It has got a lot of steam left. I don't know if it is in the ban period. However, you can buy in the cash market with a stop loss of at least 270, which is a good support area. It should reach 340 probably in the next month's time.
Well, it's not in the ban period, but it is definitely closer to getting into one. Yesterday's overall open interest was 86% compared to market-wide position limit. And if this build-up continues with regard to futures and option strike, probably it could just enter into the ban period again. Well,
I'm picking up ONGC right now because we are looking at a near 2% increase. Also one of the major reasons which is keeping the indices up. And again, with respect to its open interest, at least a surge of as much as 15% in the January futures itself. So longs building up there to a certain extent, possibly, potentially over the next couple of sessions. Amit, what's your observation here? ONGC is currently trading at 202. This is January futures.
Right.
What would you say?
So considering the gap up opening yesterday, it has still room towards 210 levels, where it can continue to see some momentum, taking support around 198 levels on the downside. So 210 is a crucial resistance. The more it spends time, then it's a wait and watch how it sustains above those levels for a further view. So till now, it can head towards 210 levels, taking support at 198.
All right.
Okay, that's the view on ONGC. Remember, the brokerages gave a thumbs up to that news of ONGC acquiring government stake in HPCL. Well, it's time for us to address some viewer queries, and we're getting a lot of queries today. Munish Bhatia on Facebook writes to ask, he's saying he's purchased LIC Housing Finance 560 call strike, and he's asking what should he do. Can we check where the current premium is? 560 call strike he's purchased, and the current premium is around 32. I don't know at what price actually he's bought that, but no, actually it's 18.6. Amit, what would you suggest here?
What is the current price?
Current price is, I guess, 18.6. That's the January 560 call strike of LIC Housing. Yes, 18.6.
Okay,
that's
right. So the stock, it's made a double bottom formation around 540 odd, and it's attempting to give a pullback from lower levels. So there is still room for 585, 588 levels on the upside. However, he should trail his stop loss to 573 based on future levels. Once it breaks 573, he can exit the call option.
All right. Well, that's the view coming in as far as LIC Housing Finance is concerned. But we'll move on and take the next query. And the next query comes from Soloni Renminbi, and she has bought the Maruti 9300 call today at 155, and she wants to know what levels she should watch out for. First, pull up, if you can pull up the futures for Maruti. Okay, there is a call. Okay, so let's address the call then. It's currently trading at 156, 157, well, we are looking at some amount of traction there with respect to the January 9300 call. Can we also take a look at what the futures are doing for Maruti Suzuki? The January futures, again, not too much to speak for, currently trading at 9,357. Nirav, I'm going to come to you on this one. What is your call on Maruti Suzuki? Saloni's entry point is at 155. That is a 9,300 call. What levels should she watch out for?
See, Maruti has made a near-term top, is what I think. Again, for this month, very likely that it is going to come down for this expiry probably in the next 2 days also. So she should be exiting from her call options. It can come down towards 9200 or 9100 and make a base there, after which she can, go for a buy on the futures.
Okay, that's the view coming in on Maruti. Our next query for the day comes on YouTube, and Vivek has written to us. Vivek says he sold Jubilant FoodWorks 2200 call strike, which means he was taking a bearish bet here. So he was trying to go against the momentum. Remember, Jubilant FoodWorks has been going up post its numbers. The numbers were pretty healthy. He's not mentioned the premium at which he shorted this strike, 2200 call strike. But nevertheless, if he shorted 2-3 days back, I'm sure he will not be in the money, because the premium of the call strike would have gone up, considering the stock has moved higher post the earnings. Amit, what do you think he should do? He's not mentioned at what premium he wrote, but I think, do you want to answer Jubilant, or should I take it to Nirav?
Anything.
Okay, go ahead then.
Yeah. Okay, so Jubilant, if you see, I would definitely urge the client to close down his position. The reason is the open interest has increased substantially on the long side. It has increased over 48% since the start of the January series, and it has given a very strong breakout above 1950 odd levels. So considering the breakout level, the stock in fact is poised for 2400, 2450 levels on the upside. So definitely a call which is sold definitely can incur unlimited losses. So I would recommend the client to exit the position.
Do you think there can be some profit booking, considering the stock is very, very close to getting into the F&O ban? Yesterday's OI was almost 94.
Yeah, so even if it comes any levels towards 2250, 2240, the reversal will be quite strong. The reversal from those levels will be quite strong. So I would urge to exit the positions.
Okay, so our next query comes from YouTube again. This one is from one of our regulars, Bikash Pekare, and he says that today he's bought an Infosys 1240 call at a premium of 15, and he wants to know what he can do with this position. Can we pull up what the Infosys February futures are doing, and then perhaps this particular call as well, and take a look at where these levels are? If we can have that up on your screen with respect to futures. The Infosys February futures currently trading at 1175. Now, if we can have that option, I'm not sure we do have the plate yet, but at 1240, he's bought it at 15. So, well, Nirav, I'm going to come to you on this one. What can he do? What is your view with respect to Infosys when we go into February? What are Bikash's options right now?
See, two things here. The first thing is my view on Infosys is positive. It should move up to 1220, 1230 in the February series. There's a lot of long built up in this counter, and very likely it is going to be rolled over. There's been some very good volumes which had happened around 900. We've seen continuous rollover of that, and expecting that to be rolled over this month also. Now coming to the 1240 call, I don't think you should be buying that. See, it is deep out of the money, and even if you want to buy calls, you should be buying at least closer calls at the money, or little out of the money calls. That will give you the most profits. That is very deep out of the money, and most likely all his premium is going to become zero.
Okay, so Nirav is suggesting not to buy that call strike of Infosys for the February series. And we've got a next query from Akash Suryavanshi. He's bought 550 call strike of RBL at a premium of 5.5, and he's pretty much in the money. 550 call right now is trading around the level of 7.9 to 8 thereabouts. Amit, should he be booking profits considering expiry is around the corner?
Well, the stock is definitely in a positive trend. The way the stock has seen the consolidation from 550 to almost 500 odd levels, it has spent a good amount of time. So definitely this consolidation needs to be taken on a serious note where the uptrend can be quite substantial. Once it breaks above 550, the stock can head towards 600 odd. Considering he has bought the Jan call option, which 3 days left, the biasness still remains positive. He can hold on to the position till the time it is holding above 530 odd levels.
Okay, so that's the view on RBL Bank. We'll move across and take trading strategies from our experts. Nirav, I'm going to come back to you. What are you recommending for our viewers today?
Yeah, the first one is Kotak Bank. See, after a long consolidation around the 1000 levels, it has finally broken out above its resistance and is now very likely to move up towards 1100, 1125. So one can buy this stock future of the February series at current levels with a stop loss of about 1050 and a target of 1125. The second one is a buy on Hexaware. See, the IT sector as a whole has witnessed a lot of open interest built up and is primed now to actually move up 5 to 10% as a whole. In that, Hexaware hasn't really moved up much, so I expect this stock to really move up. Not a lot of open interest built up. However, I do expect longs to be coming in this counter. One can buy February series future at current levels with a stop loss of 342 and a possible target of about 370.
Okay, so those are the strategies coming from Nirav long on Kotak February futures as well as Hexaware February futures. Amit, what about you?
So I have a long on PVR. The stock has given a fresh breakout above 1500, and the long-term structure is also quite strong, making a higher top, higher bottom formation. I feel the stock has a very good support at 1470, and from here it can target towards 1620, 1650 levels on the upside. I've recommended.
Are these recommendations for Jan or Feb futures?
This is for Jan
okay.
levels.
All right, go ahead, continue.
So I feel it can head towards 1600 and eventually for 1650 levels on the upside.
All right.
And the second recommendation is M&M Finance. Still, this is these are the Jan levels. The stock has seen a very good open interest built up, so I expect the rollovers will be quite substantial in this counter. It has seen somewhere around 40–42% built in the open interest since the inception of the January series. It has given a fresh breakout above 498. I believe it can hold very strong above 485 odd levels. That's the support level. And the stock can head towards 530, 540 levels.
All right, so those are views coming in from our experts in possible trades that you can take today. But with that, I'm going to thank both Amit as well as Nirav for taking us through their views today, as well as helping out some of our viewers with their queries. But moving on, Bloomberg Queen's Menaka Doshi, who is in Davos for the World Economic Forum's meet, caught up with Nariman Beheravesh, the chief economist at Market, and he says the world economy has enough momentum to run strong for at least another 1 to 2 years. However, he says Trump's unfriendly comments on Canada, Mexico, and China is a big worry. Listen in.
It is a Davos of many firsts. It's also the first time that we're entering the year and attending the World Economic Forum's annual meeting on such an upbeat note for the global economy. Nariman Beheravesh, a well-known economist at IHS Markit, has characterized it as a left-to-its-own devices economy. You want to talk to us more about that, Dr. Beheravesh?
Sure. I mean, the very good news is compared with a year ago, the momentum of growth is stronger, and very importantly, it's broad-based. It's not just the U.S. that's doing well or Germany, but it's all of Europe, and it's Japan and some of the emerging world as well. I mean, India always does well, but Brazil and Russia is doing better. So what we're saying is that left its own devices, this economy has momentum enough to go at least another year or two. Now, what do I mean by left its own devices? If there's no policy mistakes, I'm talking here about Trump's protectionist sort of tendencies, or if the Chinese somehow or other mismanage their deleveraging, which they're trying to do, or central banks somehow or other get spooked about inflation and step on the brakes too hard. If none of these happen, I think these are all fairly low probability kind of scenarios, but if this doesn't happen, we've got a good shot at going another year or two.
You missed one, Dr. Bhairavesh. Crude oil prices. They're back up at 70. They took a very quick time to get there, and now people are talking, quite frequently about crude oil prices hitting $100 as well.
Yeah.
How much of a negative is that?
It's a negative, but I don't think we're going to get to 100, very simply because the U.S. production is already starting to rise again, and I think that will compensate for what we're seeing. But yeah, it's risen. At these levels, 70 is not seriously damaging to the global economy. 100 would be, but I think it's very unlikely we'll get there, precisely because there'll be more production.
You started off by saying that this strong growth period could last for a year or two. Why just a year or two?
Well, I think what I worry about is eventually we'll start to see inflationary pressures building up and a lot of the imbalances that tend to take place toward the end of a cycle. I mean, this has been a long cycle. It's a slow cycle, but a long one. And so that, I'm not willing to say another 3 or 4 years because, the risks start to increase as we get further out.
Okay. This is the year we start seeing the Fed starting to contract its balance sheet. We also have a new Fed chief. The ECB, of course, is much further back in that curve.
That's right.
And the BOE hasn't started talking about it as yet. Neither has the Bank of Japan. Do you think by the end of the year we'll see some more convergence between the global central banks?
I think 2019 is probably the convergence year. I'm guessing the ECB will wait. Bank of Japan certainly will wait. And Bank of England as well, especially because of Brexit uncertainty. So I would say 2019 is the convergence year.
Okay, we have a wealth of global leaders here in Davos this week. Prime Minister Modi kickstarts the event tomorrow, and then we've got Emmanuel Macron, we've got Justin Trudeau, Theresa May, Angela Merkel, and then maybe even Donald Trump if the U.S. government shutdown doesn't keep him back home.
Exactly.
What are you hoping to hear from all of these global leaders?
Well, what I'm hoping is how to say this, an emphasis on cooperation, an emphasis on working together rather than against one another. And the worry here, of course, is Mr. Trump, who's said some very unfriendly things about Canada, about Mexico, about China. But that's the hope, is that the whole spirit will be one of cooperation, one of coordination. And I'll listen very carefully to what they have to say.
We'll leave it there. Thank you very much. That's just the point we've been making as well. A plethora of global leaders here at the WEF's annual meeting 2018. Let's see if they all speak a shared common language. Nirmal, Bhairavesh, thank you for your time.
Thank you.
And enjoy the rest of Davos.
You too.
And stay out of the snow.
Yeah, there you go.
All right, with that, it's a wrap on this edition of the F&O Show, but stay tuned to Bloomberg Quint for more news and updates.